Hello and welcome. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets fall towards the day's low on the December series expiry. The Nifty trades around 12,150. Banking stocks are underperforming. Reliance Industries is the top point contributor to the Nifty downside. The stock is now down for the fourth straight day. And the Nifty Metal Index is the only sectoral gainer. The top three Nifty gainers are metal stocks. And the Nifty PSU Banking Index is the top sectoral loser. The index is down for the third day today, and all of its constituents are trading with losses. That's the larger markets, but let's take a look at how things are shaping up. Neeraj?
Yeah, good afternoon, Agam. And it'll be interesting to see how the rest of the day shapes up. Remember, the expiry day was expected to be volatile, and we'll talk about how the derivative picture is looking like as well. But we've come off on a day when the rest of the world markets, which are operating at least, the Asian markets, were not particularly sulking. So we have our own issues, and maybe this could well be expiry-led, which might change over a period of time as well. I'll bring up the Bank Nifty too before we get the heat map up on the screen, and the Bank Nifty is correcting about 0.67% as well. Let's get the heat map up on the screen. I think the red would have become higher than the green as the day has crossed by. It's a mirror image of how it was at the start of the trading day. What's not done well? Let's first talk about those names. So Yes Bank is down 4%, but leave that out. The notable names which are correcting today: Bharti about 1.5% lower, Larsen and Toubro about 1% lower, HDFC Bank is down about 1%. There is weakness in Axis Bank, down about 0.5%. Kotak Bank is down. Reliance Industries is down yet another day, nearly 1%. This is the fourth day, if I'm not wrong, while Reliance has corrected in the session, in trade. What's done well or what's not corrected, let me put it that way, are the metal names. So Vedanta, JSW, Tata Steel, all of them are doing okay for themselves. There is strength in Mahindra and Mahindra, some strength in HDFC in the session today. The broader end of the spectrum, and where selectively the cuts are a lot deeper than the large cap, should get the mid cap and the small cap index, more importantly for you, to just show you what's happening there. Now look at the mid cap end of the market. Some pretty interesting names. First, Prestige Estates corrects about 3.5%. PSU banks, and a clutch of them are down today. So Indian Bank, there is Canara Bank, Union Bank. So PSU banks and the PSUs as a pocket has come off in the session today. What is doing well? Again, metals stand out. So SAIL, for example, is up about 3% in trade. Jindal Steel and Power is up about 2.5%. And Specialty Chemicals is doing well because SRF, amongst others, is up about 2% in trade. We'll talk about one more specialty chemical stock a bit later on. Very quickly, the small cap end of the market before I hand it over to Agam for what's happening at the more liquid universe. There is strength in RCF, up about 5%. Care ratings marginally higher. Very odd moves, Chambal Fertilizers. So the fertilizer names seem to be doing okay. What is not doing well? Well, very few names, but Tata Elxsi corrects about 1% right here. Just Dial is down about 1%, and EID Parry pulls back a little bit in the session today. But what about the more liquid universe, Agam, and are volumes on this expiry day particularly high?
Well, no, not at all. The volumes and turnovers are extremely low. And well, we have to keep that in mind. But let's start by talking about what's really happening in the benchmarks right now. So if you consider the Nifty, well, we are looking at an increase. The rollover standing at 55-56%. This is fairly below average because we're used to numbers of around 65 to 70%. Do we see a substantial pickup in the last 1 hour of trade? Well, we will know eventually. But for now, rollovers are not stacking up very well. It's the same for the Nifty banking and futures too. We are looking at some declines with rollovers standing just at 60%. I suspect that the way things are looking at this point in time, we may very well see rollovers just slightly below the 3-month, 4-month average. Well, we'll wait and watch. But let's talk about the WIX. Let's come down further, down 3.5% right now. It's inching towards the mark of 11. Last time we saw such a number below the mark of 11 actually was around July of 2019. And in terms of your other factors, this is of course of how things are shaping up with respect to open interest distribution. Naturally, considering we are looking at weakness in the indices, we are seeing a little more writing around the 12,200, 12,300 calls, and this will be evident in the change in open interest as well. if it is possible, I'd like to pull up the open interest distribution for January. If we can pull that up, it'll give you a better picture of how things are shaping up with respect to your long-term view, and specifically keeping the upcoming month in mind, because we certainly are seeing a lot of traction around the high-level calls. And again, it is essentially the 12,300. There you have it. That's your open interest distribution for January, if I'm not mistaken. And we are looking at around 12,300 and 12,400 calls which are being written into. And on the lower end, it is 12,000. Again, early days in the January series, but I suspect there could be some volatility in store. Let's move on and talk about your stocks as well. And of course, right at the top, we have GSPL. Neeraj just mentioned we do have a lot of metal names which are doing well, and there are longs building in GSPL, which is right up there. Besides that, we have Canara Bank, which is under a tad bit of pressure. Looking at shorts right now, rollovers are 85%. SRF is the other stock. It's turning out to be a reasonably good quarter for SRF in terms of returns. It's up around another 2.5% with longs there. And Mindtree is the other one, which is advancing 4 now. It's up around 1.8%. We'll be watching out for that. Of course, there are names like Tata LC, which will be moving out from the futures and options space today. So please do bear in mind and remember that today is the last trading day for Tata LC to be in the futures and options segment. But on the whole, a very, very quiet trading day, Neeraj, for the futures and options space.
Well, yeah, so relatively quiet despite the fact that it's the monthly FNO expiry day as well today. Let's see if it picks up. But let's begin the show with a market voice. Swati Kulkarni of UTI AMC joins us right now on the show with her thoughts. Swati, good having you. Good afternoon. Neeraj here. Thanks so much for joining in. What's the sense, Swati? We hitting the year end.
Good afternoon, Neeraj.
Thank you so much. So we are hitting the year end. There is a bit of a cool off in terms of market momentum, and naturally so. But do you expect that things will begin to heat up around the earnings season and the budget? Because January promises to be an action-packed month.
Yeah, actually, in terms of valuation, we all know that on a 1-year forward basis, we are at the higher end of the fair value zone. And therefore, a bit of, corrections at around those levels is a regular thing. I don't read too much into it. As you rightly said that as January comes, we have both earnings season as well as the budget expectations. The popular expectations are around some kind of sops coming in the budget because the demand side of the economy needs a kind of a support from the government. That is what is the popular expectation. So let us see how the things pan out. We do have the budgetary deficit probably expanding much more than what the budgetary estimates were. But I think at this point of time, some kind of support coming through the budget to the economy would be welcome.
Right. Swati, good afternoon. My question is to do with some of the large cap names. I'm sure you do have names which focus largely on companies which are part of the Nifty and the Sensex. How are you reading into valuations when you consider your expectations with respect to earnings, say over the next 2 or 3 quarters?
For last, I think I would say 2 years, what we are seeing is there is a, in terms of the earnings, there are certain sectors which are at least showing some steady earnings growth, and those kind of sectors and stocks have been bidded up. Having said that, if you look at the current macroeconomic trends that are not that encouraging. So I think whenever you look at large cap versus mid cap debate, one has to be much more careful and cautious about in general about the stocks at the stock level rather than large versus mid, because in large caps also we have seen certain stocks not delivering up to the mark as far as the earnings season are concerned. So therefore, I think it is much more stock specific. In terms of the earnings expectation, banks would continue to garner a larger chunk of the earnings growth going forward as well, because we have seen in the base there is a huge amount of credit cost setting which is likely to go down as we move ahead. There could be sectors like telecom also could see some kind of upbeat in terms of if the impact of the tariff hikes gradually kind of starts reflecting. May not be in the next quarter, but yes, going ahead that could be the case. We think the auto also has been affected because of the low volumes, and because of the low volumes even the operating negative operating leverage has hurt their margins. We think that as we we transition from BS4 to BS6, if not in the coming quarter, but at least next year as a whole, we could see some kind of earning support coming to that sector as well.
Okay. Swati, we have to admit that this year, while the broader markets may not have done well, the large caps haven't quite disappointed. Now, I was looking at some of the schemes that you run, and maybe it is by design, but for example, I think in the UTI Master Share, you probably mimic the weightages of the index only. So that might be an easy or relatively easy one. But the question is, how do you go out and try and, for example, choose companies in products which are based on dividend yield? Because companies with the higher dividend yields, and some of them are arguably PSUs, are not necessarily the ones wherein most people would want to go in, and therefore there's the risk of capital gains not coming in. And as PSUs have shown that spare for a sporadic move here and there, they are not consistent wealth creators. How do you kind of, how do you solve that push and pull out there?
Yeah, so just to correct, in the Master Share, which is a large cap oriented fund, we have 40% active share, and that means we are not just mimicking the index. And also there, we have about 13% exposure coming out of non-benchmark stocks. About 12% exposure is in mid-cap stocks. But having said that, your observations on some of the PSU stocks as far as the dividend yield could be correct, because if the capital gains are not there, then the dividend yield alone has no meaning. And that is what exactly the philosophy that I have been following in the UTI dividend yield fund. So typically we are looking for companies which have a fair amount of earnings growth, and the dividend component therefore should be increasing. One matrix that we follow is that what has been the free cash flow generation for the companies that we hold, and that gives us some comfort as far as the ability of the company to distribute dividends. And you rightly pointed out, dividend is just small component of the return. The major return contribution has to come from the capital gains that the scheme would earn from the holdings that it has. So from that perspective, if you look at, we would be overall underweight on the PSU names, especially in the energy is a big underweight sector. In the fund, we have a large overweight, or a large portion of the fund comes from IT as a sector where you have a very strong return on capital employed, you have strong cash flow generation, and therefore if you look at the dividend yields and the free cash flow yield in this space, it's in upwards of 2 to 5%, and that's much better than the other sectors in the market. So therefore we have that thought process that we have to look at capital appreciation which could be there for the fund rather than just the dividend yield. But yes, 75% of the portfolio qualifies for high dividend yield. So that's the design of the fund.
Right, Swati, what's your view on consumption themes, in this case specifically staples? How are you going about selecting, perhaps allocating funds towards the sector?
Yeah, my focus has been actually till recent times was more on the consumer discretionary space in the consumption. But as I see that there are stocks which are getting corrected in the staples also, and though when I say correction, maybe they continue to be at a premium with the market, but its own historic valuation, some of these stocks are correcting. And if you look at if there is any kind of push on the demand side, I would clearly see that the staples consumption could get upside in terms of the volume growth that we could expect there. So wherever valuations are comfortable, we are constructive on those names now.
Okay. Just wondering, where where do you think there is a possibility or an outside chance of a movement which might surprise most people? You know, to my mind, I think real estate was a pocket which did that in 2019. Broader markets were not quite there, but the real estate index gave returns which were quite spectacular, northwards of 20%. And not too many people anticipated. A lot of people still don't believe it. What do you think has the probability of doing that over the course of the next 2-3 years? A pocket that the market may be underweight on right now, but you believe could do well.
Yeah, I think if you look at auto sector, for example, most people are negative on that sector today. Also, fundamentally, also that sector has seen the onslaught of so many variables that has led to cost of ownership going up. Be it in terms of initially it was the insurance, compulsory insurance, then the transition from BS4 to BS6 implying 10% kind of increase in the cost of ownership, and worse was the NBFC slowing down on the growth. I feel when you take a 2 to 3 year period, we have the aspiring population that we have. They always have aspirations to own their own vehicle. The domestic demand potential that we have, I think these are the solid demand drivers which could surprise the growth in this sector, and therefore that one name stands out clearly, which could be a kind of a outperforming sector over 2 to 3 year horizon.
Swati, before I let you go, I do have a question on the metal space. Well, of course, a lot of this has to do with cyclicality, but at this point in time, how are you seeing some of these commodity-based names, specifically with the ferrous and non-ferrous names out here? How would you go about looking at it and perhaps putting in funds?
So on the metals, actually, what is important is, since the prices are not in the hands of the metal manufacturing companies, because prices are often dependent on or decided by the global demand and supply, what is important is where the players sit in terms of their cost curve. So clearly, I see merit in looking at companies which are sitting at the lower end of the cost curve. So that means their earnings will not have that much volatility if the prices become volatile. Having said that, if you look at metals names, actually in a scenario where the metal prices were depressed, these were available at very attractive price to book levels, and therefore these were classic value plays. But as I said, the global news flows and global noise around actually keeps covering these names, and therefore as the US-China trade war is seen to be easing out, you have seen interest coming back to this sector. You also have seen, particularly in steel, there have been cases where the price increases are expected, and also exports from China are not likely to be a dampener. That's what is the expectation. So all these things have improved the sentiment around the stocks in the sector. But as I said, if you want to have a much I would say a conservative way to look at this sector is while the leverage plays would actually give you much higher delta, if the prices become volatile, that also could lead to some kind of massive correction in these names. So therefore one could look at the companies where the cash flow situation is good, or the companies which are sitting at the lower end of the cost curve. So that could be one approach that one could follow, and my holdings have been with this kind of thought process across the funds that I manage.
Okay, point taken, Swati. We leave it at that. Thank you so much for joining us and taking us through your views on the markets. But we will stick with the metal sector. It has been a forgettable 2019 for the metal stocks, and not only the Nifty Metals Index, which is down as much as 13% this year, but 3 out of the 15 stocks in the index have seen, well, only 3 out of 15 have seen about positive returns in the year. So what's in store for the sector and the companies in the year ahead? Will they manage to see a turnaround, A lot of this hinges on global factors. Of course, we do know that. But let's speak to someone who tracks this sector closely. We have Amit Dixit, research analyst at Edelweiss Securities, who's joining us on the show. Amit, good afternoon. Thanks for taking the time out. My question first is to do with, let's just talk about the ferrous side of things. We understand that domestic steel prices have seen a little bit of a rise, specifically HRC prices, which have been ticking up in the last, 2 or 3 odd months. What has been your observation here and the possible companies that this may impact?
Yeah, good afternoon. So after an unprecedented successive 21 weeks of decline, we saw steel prices picking up towards the beginning of November, and thankfully the trend has continued since then. So if you look at the uptick in steel prices from bottom, we have seen almost a 7% increase, and the last increase, that is in past week, in fact the increase was almost 2%. So we have clearly seen that the steel prices are off the bottom, and so have the stock prices also reacted. Now, if you look at going ahead in 2020, I would say that in case of flats, I see a little bit of concern. The concern primarily emanates from the fact that now at this level we are in fact above the anti-dumping duty level, number one, and above the import parity levels as well. So therefore, there could be some resistance in case of flats prices unless domestic demand recovers. In case of longs, it's a different story though. So what we have seen in longs, that first of all the small and medium players increased prices, and prices have been on an uptick. And longs is a more localized market, unperturbed by imports. So therefore, we really see if the demand uptick happens, and it will happen in infrastructure as is the norm. Longs might see better days compared to flats going ahead.
Mm-hmm. Amit, good afternoon. We were just speaking to Sheshagri Rao the other day, and he was saying that October and November, in light of what you just said, that October and November have turned out to be better than what maybe most people were fearing, and his belief seemed to be that the normal course of demand and supply and prices bottoming out might actually lead even global prices to be a lot more steady than what people believe right now. Can you tie in your estimates about what will happen in Jan, Feb, March to the Indian prices with what do you expect the global prices to do?
Yeah, certainly. So, global prices, as far as the impact in Indian context goes, that only goes in case of flats, because flats are more amenable to imports. Now, if you look at global flat market, the prices in Black Sea region, so they have bounced back by almost 22% in past 6 weeks. In comparison, by the way, Indian prices are up just 7%. If you see prices from Japan, prices from China, prices from Korea, all these prices are up almost 10 to 12%. And a lot of it has to do with the buoyancy of demand we have seen in China. So Chinese demand has actually surprised everyone on positive side. And it is almost end of the December, and we have found that HRC prices have remained quite robust. Longs prices have of course corrected in China in line with the seasonal effect that we see, that during winters construction typically takes a back seat. But everyone is very hopeful that in case of China, things will continue to gather steam. And on supply side, we have seen clearly that Chinese production has peaked out, the daily production that is. So the increase in FY20 is expected, or FY21, sorry, or CY20 is expected to be a lot lower. And that is what is expected to hold the global prices up. Look at the global spreads for that matter. In Europe and in China, these spreads are already above last quarter level. In US and India, they are just trending there. So clearly we have seen an increase in spreads, increase in prices, and globally if you look at it, prices had hit a very, I would say, concerning level, and they are kind of getting back now. A lot of it has also to do with the iron ore price. So if you look at iron ore price, that is around $90 still, and in CY20 as well, we don't see an adequate supply response. So in my view as well, global prices should be steady. Now, in case of Indian prices, as I said, flats prices are dependent on import parity. So we have reached a level where, import parity has been hit. So it remains to be seen what happens to prices from Japan and South Korea, which are the primary importers in India. So that is what we have to really see and kind of concentrate on. So that is where I said the resistance factor comes in.
Before I talk about non-ferrous side of things, how are you placed in terms of preference for some of these steel companies?
Well, as far as I will first give you the overall sector preference that we have. So we are more constructive at this stage on ferrous compared to non-ferrous. Within ferrous, again, as I said, I see better days for longs compared to flats. So we are we have a buy on JSPL and hold on Tata Steel and JSW, and we have reduced on sale. So that is as far as the stock preference goes in ferrous.
All right, right. So then let's talk about the non-ferrous side of things, because I believe you have an observation that volumes have not been up to mark. They have not really picked up. Where and how were you placed in terms of some of these companies?
Yeah, so in case of non-ferrous, on the other hand, what I apprehend is that the supply from China, particularly in CY20, is going to play a dampener. So if you look at zinc, if you look at aluminium, after remaining in deficit for almost 3 years, both of these commodities are expected to be in surplus. Growth rates have plummeted in case of primary aluminium as well as zinc. And therefore, we don't really see an uptick in prices here on. If you look at non-ferrous names, they are like very, very closely correlated in terms of stock movement with LME prices, be it Hindalco, be it Vedanta, or be it Hindustan Zinc. So therefore, I don't really see a lot of positivity in non-ferrous names. Of course, Hindalco being an exception, not because of primary aluminium, but because of secondary aluminium, which we believe is a very exciting theme. So if you look at secondary aluminium side of the business, both beverage can market and auto markets are doing very good for them. So as against, primary aluminium demand expected to remain very stagnant or decline in CY19. In fact, secondary aluminium demand went up. And if you look at the demand for auto body sheet, ABS, whether in US, in Europe, or in China, it has seen, in fact, a double-digit increase. So to that extent, I think secondary aluminium players would be at an advantage, and Hindalco, which derives almost 65% of its EBITDA from Novelis, definitely would be at a better position. So as far as non-ferrous is concerned, overall, well, we believe that prices are not going to go up materially, and therefore we don't have a very positive view on the stocks, except Hindalco, of course, for the reasons I explained.
So I'm assuming in this case you prefer Hindalco, not so much something like Hindustan Zinc, or for that matter Vedanta.
Yes, that's right. So we have a buy on Hindalco and hold on the other two names.
Okay. Okay, Amit, we'll leave it at that. Thank you so much for joining us and taking us through your view on the metal sector. Of course, an insightful take in this case, and we have plenty of takes when it comes to the steel and sector in general, but also companies which stand out a little more as against the others. And of course, non-ferrous sector is looking at a little bit of weakness, considering the kind of subdued volumes that we have seen off late. So, and that's very evident in the kind of returns that we've seen. But overall, it hasn't really been a very encouraging year for the metal sector. So, well, we'll just have to wait and watch whether or not, well, the prospects of improving volumes, at least, and rather prices, at least in the steel sector, can push the metal index higher. So, well, that's what we have as far as the sector is concerned, Neeraj.
Okay, just taking a look at the markets and how the last couple of last 10 odd minutes have been. While there have been stocks which have rallied a little bit in trade, and the likes of Infibeam, etc., have gained even more, and it's now up about 17%. The gainers are few and far in between, at least in the last 30 odd minutes. There are stocks which have pulled back a bit. So RBL Bank, Union Bank, example, have succumbed to even more selling pressure. Union Bank is now down about 6%, and RBL Bank was in the green, is now trading in the red. So there's some pain points out there. or selectively. Also, Reliance Industries continues to grind lower, and we will talk to our experts about that. We will make a segue into the trading wheel with maybe a call on Reliance and what to do now after this correction that we've seen. But remember, the news flow and some analysis around that is this, that Reliance Retail is not going to list or hit the primary markets in a hurry. Employees who are sitting on shares or who are sitting on shares of the company are being given the option to convert them into shares of the parent Reliance Industries. The scheme of arrangement was uploaded on the company's website on December 11th, but Sumit has dug into it and tries to give us some details which might be useful. Sumit.
So I'll just firstly speak about the deal that is there between Reliance Industries. So the deal is between Reliance Retail, some specified shareholders and an entity named Pranatharthi Commercials Private Limited. Now, according to the scheme of arrangement, the specified shareholders, which are namely the employees of Reliance Retail, will get shares of Mukesh Ambani controlled Reliance Industries. Now, the scheme of arrangement was uploaded on December 11, but no formal announcement of the same was made to the exchanges by Reliance Industries. Now, according to the scheme of arrangement, the specified shareholders of Reliance Retail will get 1 share of for every 4 shares held by them in Reliance Retail. However, these shares will not be issued by Reliance Industries. Instead, the entity named Pranatharthi Commercials will acquire these shares from the market and issue the same to the specified shareholders. So these specified shareholders hold nearly 35.8 lakh shares currently in Reliance Retail, which is nearly 0.05% stake in Reliance Retail. So after that conversion, it will be close to 8.94 lakh shares, which is what Pranatharthi Commercials has to provide to the specified shareholders of Reliance Retail. And on December 11th, if you see, the share price for Reliance Industries was around 1,562 rupees. So the value of this 8.94 lakh share comes to around 140 crore rupees. So we have tried to extrapolate Reliance Retail's value using this numbers given in that scheme of arrangement. So the value of this 8.94 lakh share is close to 140 crore. And this 140 crore would have been around 0.05% stake in Reliance Retail, which gives us the Reliance Retail's 100% value at close to 2,79,476 crore rupees. Now, this derived valuation of 2.79 lakh crore is nearly 14% lower compared to the average valuation given by the analyst of Reliance Industries. So we have 8 analysts who have given their valuation, and the average valuation of all these 8 analysts comes to around 3,25,000 crore rupees, and the valuation that Reliance Retail has given will be giving to its shareholders is close to 2.79 lakh crore. This is nearly 14% lower than the average valuation given by the analyst. Now, if you see that this decision to implement the scheme of arrangement was taken after Reliance Retail received requests from its employees holding these equity shares for providing them some kind of exit and liquidity, and as the company does not have any immediate plan of listing of equity shares of Reliance Retail, they have chosen this scheme of arrangement.
All right, Sumit, thanks for getting us those updates. So, well, an important, factor to watch out for with respect to the near-term prospects of Reliance Industries. But it's time to get in our technical experts for today. Of course, Amar Singh of Angel Broking is joining us at this point in time. Good afternoon, Amar, and thanks for joining in. Tell us, what is your view of the indices now? Well, eventually, as we move into the next series, or as well as in the near term, what is your expectation with respect to the benchmarks?
Yeah, very good afternoon. What we are seeing on the benchmark indices is that some sort of profit booking is also stepped in. Also, we are looking at the major stocks like Reliance, some of the heavyweights. They've also corrected, and we witnessed profit booking in Kotak as well as ICICI, some of the banking space as well. If you look at technically on the charts, I would say this is just of a minor correction. One. Secondly, we are also on the expiry day, so that also is having an impact. As long as we don't see the index, that is Nifty, sustaining below 12,050, 12,100 mark consistently, I would say the trend definitely is positive. So dips should be used as buying into, but as I had spoken earlier also, that higher levels are being sold into because there is some sort of bearish divergence on the chart. So on the upside, again, if we look at Nifty, somewhere resistance comes at around this. I'm talking spot Nifty, somewhere around 12,200, 250 zone. So it's a narrow range that is playing out. And also, if you look at the major heavyweight stocks, they are also approaching close to the crucial support zone. So we could witness some pullback, but we'll have to watch out whether it holds. So for Nifty, sustaining about 12,200, 250 mark is something which is very much essential for this. I'm talking about Nifty spot. So that's something which is very important and essential for any uptrend to remain. But overall, the trend definitely remains positive.
Right.
Coming to Bank Nifty, what we see again is that Bank Nifty is also displaying some similar sort of trend. On the daily charts, yes, we've seen some consolidation, but the trend definitely remains positive. Bank Nifty spot has got good support coming around 31,800, 850 zone, whereas resistance on the upside is around 32,152, 32,200 level. So it's a narrow range which is trading, but technically, if you look at the indicators, yes, some of the indicators are in overbought zone, so that reflects that upside would be met with selling pressure and resistance. But the trend, if you look at the trend remains positive for both Nifty and Bank Nifty.
Okay, Amar. So, what stocks are looking interesting to you right now?
I would say the first one to look at is NIIT Tech. This is one stock which has definitely, I would say, bucked the trend, and it's if you look at it on various time frames, long term, intermediate, short term, it continues to trade firm and positive. And also the short term indicators are also displaying bullish momentum in spite of the stock moving sharply from almost 1400 levels to as high as 1643. I would say this is one stock one can look at. So any dip can be used as a buying opportunity. Currently it's around 1611 or so. So any pullback towards 1600 odd levels can be used as a buying opportunity in NIIT Tech with a stop loss of 1553 and a target of 1674 on the upside. The second stock to look at is that's a sell on Sun TV. Sun TV. So what we are seeing in Sun TV is that technically, if you look at on longer term time frames, the stock continues to trade negative and the trend remains down. However, on the weekly as well as the daily, we are seeing some sort of I would say the stock being in oversold territory, but I would suggest that any pullback should be used as a shorting opportunity with a strict stop loss of 463. So ideally it's around 445 odd levels or so. So any pullback towards 450, 452 levels can be used as a shorting opportunity with a stop loss of 463 and a target of 427 on the downside.
Okay, Amar, let's talk about Tata Elxsi, because we know that today is its last day when it remains in the futures and options space. But it is looking at a sharp drop today, and in fact, it's been weak over the past 2-3 days. What is your reading here? That's one. Secondly, does this have anything to do with the technicality of the fact that it's moving out of the futures and options market? How would you address this?
See, if we look at Tata Elxsi, what we've seen in the stock is that the stock witnessed a significant rally from almost 600 odd levels in the end of towards the end of August to almost 900 levels in December. From there, the stock is witnessing some sell-off and some profit booking. If you look at the stock on the long-term charts, I'm talking about the monthly charts or the quarterly charts, you'll find that 880, 890, 900 levels, those are very crucial resistance levels also. And even if you look at the stock on the daily charts, you'll see bearish divergence on the charts. So clearly those were levels where those who were looking at these levels, they would have exited the positions, and also those who wanted to go short, they would have gone short, because the risk reward ratio was definitely in the favor. Now coming back to your question, I would say technically, I would say it is long term is negative for the stock. However, on the daily charts and the weekly charts, the stock seems to have formed some very strong support zone coming around 780, 800 zone. So on the downside, that's going to act as a very crucial support zone. And yes, those who had their positions in the features and options for this particular derivatives segment for this particular stock, they would be unwinding their positions. And as I said, overall technically the stock long term continues to trade negative, and it had to witness profit booking around those key resistance levels.
The other pocket which is doing well is specialty chemicals. Remember, we were talking about how RT Industries, Navin Fluorine, etc. have done well. And they've had a strong 2019 as well, with most of these doing well. One such stock, which has been an outperformer, is Deepak Nitrite, which is trading at a lifetime high in today's session. Look at that move on the chart. It's off from the highs of the day, but still at 371.5, it's trading at life highs for itself. And strong moves there. up almost 80% for the year. The key is, despite this move, there is some return potential, which is what we'll try and display via our graphic dashboard of the Bloomberg terminal, as well as the analyst recommendation. Now today's move, and if we can pull up the volumes picture for Deepak Nitrite, look at this. It's gained today on some very smart volumes and much higher than the 20-day average volumes, which is the blue line. So the trading today has happened on fairly high volumes. It was a recommendation, remember, on Monday or Tuesday from one of our experts. Now let's go back to the graphic dashboard and try and show you what's happening, not just to the daily volumes today, but the kind of comparison to the peer set and otherwise. Now it's trading at a marginal premium to the peer set, but at 11.5 times 1 year forward price to earning multiple. It's not a terribly expensive stock, and which is why maybe there are 7 analysts who have a buy recommendation and no analyst having a sell recommendation. Now let's go to the analyst recommendation list. Look at this. 7 names out here with a buy target, with a buy call, and most have a target price which is higher than the current market price, and which is why you see this return potential here. The LTM return, the last 12 months return, is clearly 80%, but the return potential is about 20.9%. So there is some dramatic gains that have happened already, which is the 12 year-to-date return, and still a return potential of about 20.9%. That shows you the kind of faith that people have in this business. And look at this chart. Let's just try and enlarge this analyst recommendation chart. And why I'm trying to do this is this yellow line that you see, this line is essentially the current market price, and the white line is the target price. And you can see how this white line has consistently moved higher, because analysts keep on increasing the target price, and the current market price, average price, is about 444, which is what explains the kind of gains that this stock, that people on the sell side believe the stock can deliver. Now that's the fundamental call. The question is, and we'll talk to Gurmeet about this too, but first the technical call. Amar Singh, it's had a good rally. It was a call on the basis of charts in Tuesday or Monday's session. Can it do more after having run up for a little bit, about 2-3 percentage points in the last 2-3 days?
See, if you look at Deepak Nitrite's from a long-term perspective, the stock always was in a bull trend, and but it did witness some profit booking coming, and then the stock corrected all the way. If you look at somewhere around 220 odd levels, and from there it has bounced back. So if you look at the stock on the short-term charts as well, because the long-term charts were anyways always on the upside, so dips would be used as buying opportunity. Now looking at on the daily charts, what we are seeing is that on 13th November it had made a high of 377, and today's high is also somewhere around 376.50. So that's a previous stop which the stock definitely needs to breach and sustain above. But technically, if you look at even the short-term charts, it clearly shows that there is bullish momentum in this stock. So dips should be used as buying opportunity in the stock. However, I would say 375, 380 is a level to watch out for. Sustaining above that level, yes, then the stock is trading at all-time highs, and the trend remaining extremely strong and positive. So then the stock would have a potential towards 395, 400 odd levels. And what the stock has managed to do over the last couple of days, that it has now the support zone, which was earlier around 340 or so. Now that has shifted towards 350, 355 zone. So that really shows that there is more to come in the stock, as long as the stock consistently sustains above 375, 380 levels.
Right. Hold that thought, Amar. Let's take this conversation forward. Let's get in Gurmeet Chadda of Complete Circle Consultants, who is joining us on the show right now. Gurmeet, good afternoon. Thanks for taking the time out. Before we proceed, now that we are addressing the chemical sector, if you have a view, firstly, on Deepak Nitrite, and secondly, what you like and what perhaps you would like to avoid in the chemical sector right now.
Coming specifically to Deepak Nitrite, I think, if you see company, I think it has great R&D capabilities. We saw how they came into phenol acetone and achieved almost 100% utilization in 5-6 months. Off late, obviously, there's been and by off late I mean in last 1 year, we've seen multiple issues. There was 2 weeks of shutdown a few months back. The global phenol prices were a little lower. Neeraj was highlighting the valuation bit. I think it's a good company at these valuations. And we like that stock. It's just that you'll have to be maybe a little more patient in terms of in terms of price movement taking up. But from a fundamental basis, it's a good company to be in. Another company which we like, which is not really fully special, chemical, is PI Industries. It gives you a combination of both CRAMS and agrochemicals. Free cash flow generation, great track record. That's another play one can look at. Even RP, I think, is another play we like. In this particular space. So I think this entire space you have to be, because it sounds homogeneous, it isn't, and you have to keep watching the regulatory front and a lot of other stuff. And get into it. So our three ideas which we track in this particular space is Deepak, which we discussed, PI and RP.
Okay, well, Gurmeet, so that's as far as the sector is concerned. But before we take this conversation forward, let me just get your view on the overall sense of the markets and where they're headed. Of course, we are heading into what may be perceived as a relatively volatile period, especially now that we've had quite a bit of consolidation coming through in the last 1 week or two. What's the view forward, especially keeping one, earnings in mind, and secondly, the union budget?
See, I think the only risk right now is that this clearly is a hope and liquidity rally in expectations that, a lot of reforms will happen leading up to the budget, as you rightly said. I've been speaking to a lot of CIOs and fund managers. In fact, Navneet pointed me that, the PAT of top 500 companies, the margin has fallen from 12.5% to sub 7% this year. And it clearly shows, negative operating leverage. So I think it's going to be a slow grind, and the market is clearly polarized. So one has to be a little cautious in terms of where you put your incremental money to work, because it's going to be a slow grind, and and as the market has been, while 15, 20 stocks continue to move up, the broader portfolios haven't seen those kind of returns, and it's slightly been a little frustrating even for the MF investors, which we are now seeing a bit of that trickling into inflows as well. So my view is that keep it balanced, and I've been making this point since the beginning of the year. Debt still offers great opportunities right now. I mean, a 50-50 asset allocation would actually be good, for the first probably 2 quarters of next year. The longer end, I think RBI it just started this operation twist. I think you will see more and more efforts being made, because it's something very unconventional RBI has done. And you would see more and more buying of long-dated bonds and selling at the shorter end. Just to give you an idea, the repo rate today at 5.15, despite Operation Twist, the 10-year triple is still is at about 760. That's a spread of 240 basis points. So you would see, if you want to go long in products like Bharat Bond and some of the even other funds which have a roll down maturity, because in a roll down you can hold for long, you can still make 7-8% kind of returns on a long-term basis in debt, which with indexation and post-tax could be still 7%. And mind you, our nominal growth today in the economy is still 7-8%. So be balanced, be very selective where you are buying, and be a little counter-cyclical. Good businesses going through tough times, if you can gradually nib into them, I think gradually will yield good results.
Well, we'll talk about some of these. Which is the best good business which is going through a tough time? There are a clutch of them which are doing that. But Gurmeet, stay on. So much more to talk about. Let's welcome in Rahul Mohinder of Viratech Software as well. He joins us right now on the show. Rahul, as always, good having you. Thanks much for taking the time out. There's a bit of a pullback on the indices today, Rahul. Expiry day-led move, would you reckon? Or is there something else? And based on this move, what's your near-term expectation on the markets?
Good afternoon, Neeraj. I think, yes, as you correctly identified, it does seem to be a bit of expiry role play in the whole down move. And the reason I say that is, it's largely led by stocks like, Reliance Industries. So it's heavyweights which are really contributing to the index correction. And when you look at these heavyweights, their declines have not been with increasing volume. So again, nothing to panic. In fact, quite honestly, this may be a good opportunity for you to get in at lower levels with a clear stop loss. So I think I'm more tilted towards buying this correction than anything else. If you're looking at levels, 12,150 on the Nifty spot a very important support. I think I wouldn't conclude of any downtrend unless we breach those levels. Again, the resistances on both the Nifty and the Bank Nifty remain to be the immediate highs around that 12,300 to 12,330 level on the Nifty. On the Bank Nifty, there's still a resistance at 30 to 500 where we recently retraced back from. But I think it's a matter of time, Neeraj, that we will clear these levels and seek much higher levels.
All right. In that case, what's caught your attention when it comes to stocks, Rahul?
Coming to stock specifics, I'll start with a Maruti. Again, we've got targets of 7,380 on Maruti. I'd buy in with a stop loss at 71.90. Tech Mahindra continues to look like it's going to outperform. So 800, in other words, a new intermediate high again, would be a near-term target. I'd keep 760 as my stop loss. I think from a trading play, both these stocks could be very interesting.
Okay, we will watch out for those as well. By the way, must say that while equities are doing what they are doing, gold too is making a headway above that $1,500 per troy ounce mark, and with the currency doing what it is doing as well, which is not gaining materially against the dollar, I think the gold prices in India should be okay too. So that is one thing that you got to keep at the back of your mind. Just wondering, we don't usually talk about gold too much, but it's done reasonably okay. Rahul, you track these precious metals on the charts and gold in particular?
Yeah, Neeraj, more particularly from the COMEX perspective, because that's where things lead. And honestly, things look pretty good. So, when you look at the clear resistance on the gold futures and COMEX, it's more around 15.25. But yes, long term, again, I'm trying to make a slightly long-term call here. I do think gold will again move to a new high, more towards that $1,600 level. So from that perspective, I would clearly be a bull on the precious metals.
Well, precious metals, and it's interesting as to the kind of wealth creation they do. I mean, Agam, all of us like, right? I mean, especially in India, you have through centuries gold holdings in your portfolios, not just paper, I mean, not paper gold really, but the actual gold.
Yeah.
And therefore, gold prices moving up should create that wealth effect will equities and real estate are failing to do right now.
Sure,
so that should be interesting. But I wonder if there is an equally important sentimental effect on companies like Titan as a result of this, because people would want to come in for jewelry in any fashion whatsoever.
Yeah,
is there a correlation of sorts?
It's interesting that you spoke about it, because the management of Titan usually says that well, for now at least, while they have seen whatever little weakness that they have seen over the past months, is because one, a lot of people out there, they have not bought jewelry in terms of buying it as an investment. It is more to do with the usage and the ornamental value more than an investment value is what their observation is. But well, Titan of course has been doing well, and for that matter, it has been used as something which has given you very, very good returns. But that said, at least as far as the management of Titan is concerned, then they do not always suggest that people buy their jewelry with respect to as much as investment, as much as for the value of ornamentation.
Gurmeet, gold doing well, no direct correlation I'm sure to prices, but by and large, are you bullish on gold ornamental companies or the gold finance companies? I mean, Manappuram and Muthoot are simply seeing a surge in the business any which ways.
So, Neeraj, I think short-term surge will happen because the value of the underlying collateral goes up, and they don't really hedge exactly the way a Titan would, because Titan probably will have more. If you have your sharp surge, you would have probably more inventory issues, because at that level you will hedge your prices basis that. So I think Titan, the reason for slight underperformance largely came because of the numbers and scaling down of the guidance. Typically there is a bit of a negative correlation when prices go up too sharply with jewelry sales, but I think Titan has a far more robust granular book. We've been discussing their gold harvest scheme, how much flows it gives to them on a stable basis. The eye business seems to be picking up. The watch segment also seems. So they're clearly it's a more diversified play. And at that valuation, you will see a bit of a sloping down in terms of volume growth. Obviously, you will see a bit of a. So my view is you will see some correction there. And maybe more time correction than price correction, considering the valuation sitting at. But eventually, this is something which any correction in these kind of stocks are always, should be used to buy up. I think there are better plays if you just avoid the gold space and look at FMCG or consumption as a space. I think if you go a level below a Nestle or an HUL, you will get probably a little more better place. May not be very so something like a Dabur, for example. I was seeing the breakup it has today. Oral care is today 18%. Obviously, it's known more for hair care, which is 22-23%. The health supplement portfolio, which is 18%. Then you have the other cosmetics and the personal hygiene bit. So it's a far more diversified play. There are 3 brands which are 1,000 crore plus turnover. They have around 16 brands with 100 crore plus turnover. And they're doing phenomenal job in premiumization in terms of cost optimization. They've silently added distribution. The outlets have now gone up to almost 7 million. Mind you, HUL is 10 million. So Dabur catching up to 7 million is quite humongous. In the last 2-3 years, they've really ramped it up. So something like that could be a better play right now in terms of incremental flows in this space.
Okay, well, the Nifty, for that matter, at this point in time is near day's lows. A key contributor perhaps can be, attributed to Reliance Industries in the weakness here. It's down for the 3rd straight day, and it is, in fact, trading. Reliance Industries as well is trading at day's lows currently. So there certainly is a little bit of weakness coming in through. Amar, can you come in on Reliance Industries and the view that you have now? Is there more weakness in store for this one?
Yeah, I would say that looking at Reliance, what we see is that Reliance on the long-term charts continues to remain positive, but yes, it's in overheated territory for quite some time now after the sharp rally. However, on the daily charts, the stock has been displaying bearish divergence since the start of December. So clearly that was a sign that the upside for Reliance on the short term definitely seems to be over. And what we are seeing on the charts for Reliance is that Reliance has got good support coming around 1500, 1510 levels, because even on the weekly charts, that's the level where the stock is likely to find strong support. So 1500, 1510 is going to be very crucial and support for Reliance. There's a very high probability that we could witness a temporary bounce back from those levels, because for any meaningful upside rally on Reliance, it needs to sustain above 1570, 1580 levels. So I would say that we could see some further selling pressure in Reliance, and 1500, 1510 should act as an immediate level of support.
Okay. Rahul Mohinder, a couple of names, I'm actually stuck on these names since the morning because I wanted to talk about a couple of them. I wonder if you believe there is any bit of short covering red rally possible in these over the next 1 hour of trade. One of them is Colgate-Palmolive. Any thoughts here?
Well, it's tough to make such a short-term call on this stock because it's really not a trading favorite per se. But yes, long-term, I think this is an area where you want to be buying it. Even if I look at the shorter-term charts today, I did see merit in staying long. So even at these levels, I think if you're looking at for the next 2 or 3%, it clearly looks up, and I think the correction should be utilized well.
And the other one is something that you mentioned about when you spoke about the reasons why the markets are lower. Can Reliance see a bottom at these levels?
Very much. And I mean, again, I was clearly looking at volume patterns here. The last 3-4 days, agreed, they've been down. We can all say that this correction is kind of expected. When you talk to most traders, they do believe that Reliance has seen a very good run. And a correction from strong resistance points, of about 1600 plus were kind of in a way expected. And I think the last 2-3 day drop again on the back of low volumes, keeping in mind the expiry overhang, I kind of concur that 1500, 1510, that's the point where you want to look at, keeping a stop loss below that and buying. So again, I'm sticking my neck out here and trying to call it a bit before the signal. But I think if you look at risk is to reward, I buy now at 1525, 1527. I'm going to risk about 25 odd rupees, but I think the upside is clearly another 70 to 80.
Okay. Hold that thought. Let's get in Chakri Lokapriya of TCG Asset Management, who has said that revival of sales is expected in auto ancillary sector in the third quarter. And in a conversation with BloombergQuint earlier today, he also weighs in on the subdued growth in the FMCG space. Listen in.
The auto ancillaries being primarily smaller companies than the mainline auto companies have fallen much more. The valuations are far more attractive. But on the flip side, they also have some of the better run or larger auto ancillary companies have diverse revenue streams where they supply products not just to four-wheelers, but you would have the same company supplying to both four-wheelers and two-wheelers. And therefore, in a way, they are diversifying within the auto industry. And second, they also have some of the companies which have like Minda or Motherson. These have both export revenue as well as domestic revenue, further buffering the downside. So against this backdrop, I think in this coming quarter, third quarter, we are likely to see some of the auto ancillaries begin to show up a revival of sales of revenue at the top line, which will flow down to the bottom.
Okay. Chakri, I'm sure you must have heard about Unilever indicating weakness in the South Asian markets, and that would, of course, include India, considering being the largest market. If we were to go with analysts' expectations of around 5% volumes growth, my question then is, can we project that to the entire FMCG sector? Which means, then my question is, can we expect that subdued growth in the entire FMCG sector as a whole, perhaps expecting about no more than 5-6% volumes growth that may impact revenue?
I think the FMCG sector is a combination of both rural and urban demand, and the fact that it's a well-known fact that both these urban and rural had slowed down. On one hand, the valuations have kind of gone fairly up for some of the frontline FMCG companies. Now, against that backdrop, you are now they have had some raw material costs inching up in the last quarter or so, palm oil, for instance. So against that backdrop, I think you'll have the larger companies focusing more on a volume market share rather than trying to compete, rather than a pricing differentiation strategy. So against this, it's more largely operating measures which will try to bring down costs. There is no pricing power really, so it's more a volume game. So I would actually stay away from some of the FMCGs given the evaluation.
Just one final comment on whether you believe the momentum in this space, which has been there now for the last 4 or 5 years, could well continue going ahead, fundamentally.
Yeah, I think the short answer is yes, the momentum will continue, and for fairly diverse bunch of reasons. One is many of these well-known companies have both domestic and export revenue. Exports are doing fine. Second, they today have a bouquet of portfolio of products which kind of diversifies their revenue streams. And three, their valuations had gone up, corrected, and now looking fairly decent. So against this backdrop, chemical companies, yes, we find them attractive going into 2020.
Well, Chakri believes 2020 is the year of mid-caps. Gurmeet has been saying that too, and I think we've had our technical experts give out a lot of mid-cap calls the last few days. Well, sticking with that, let's figure out what's made it to Sharad Dubey's list of the Fab 4 stocks of the day. Sharad, good afternoon.
Good afternoon, Neeraj. And I think the mid-caps have actually made it to the list. The first one being Dishman Carbage and AMC. The stock has halted its 6-day losing streak and is stuck in the upper circuit of 10% after the company stated in its press release that the search operations by the IT department has concluded. So this search operations lasted from December 19 to December 25 itself. Yesterday, in also the bulk deals, it was reported that Motilal Oswal did sell almost 1.5% stake in the company. So that is something which we'll be watching out for this counter. Up next is Mahindra CIE Automotive, which is up almost 5.7% as auto ancillary stocks are in focus today, and the stock itself has risen by its highest levels in 3 months. This is based on the news that there is an anticipation building up of a potential scrappage policy which will be introduced going ahead for the budget. Up next is SAIL, which is up almost 3% of the fresh long. We're seen with a high open interest of 38% and volumes, coming at almost 1.5 times its 20-day average. Even the metal pack, today has been sectorally the best performer. And the last stock of the day is Navin Fluorine, which is up almost 1.5%. It sees its biggest winning streak since its listing. So this winning streak is almost for 10 days, and the stock has risen by more than 13% over this period. So these 4 stocks are buzzing in the space today. Back to you.
All right, Sharad, thanks for getting us those 4 stocks which are buzzing in today's day of trade. But I'm going to take another sector forward that I have spoken about in the morning. Gurmeet, if you can weigh in on all the internet-facing companies. I have the likes of Affle India, something like a Just Dial, also an India Mart, or for that matter, an Info Edge, or very much internet-based companies. How would you go about picking your names in this sector?
Yeah, tough one, on this. But, I think Info Edge looks good. I think it gives you both a play in terms of the hiring bit as well as the investment it has in food aggregators and a lot of startups. While I've not been recommending that to clients, but as a disclaimer, hold that in personal capacity. I think the other, which is not really internet play, but is actually a derived, is Quest Corp. I think I've been in touch with a few colleagues who work there. The management guidance is good. The H1 hiring is up. I think if I'm not wrong, the number is in upwards of 55,000. While if the economic activity remains as it is, there could be some impact there. But I think it's a very, very long-term structural play. Another one which is which could be while India Mart has run up quite a bit, but any meaningful correction there, I think is another opportunity to add on to the stock. IRCTC, while it's not really an internet company per se, but I think the valuation right now is more in terms of the number of transactions which happen on it and what can be done with the kind of data the company has. So IRCTC to me, not a pure internet play, but something which again I think other than the monopoly business it has in water, railway booking and others and catering, I think it's the data traffic which could be potentially used for upsell, cross-sell and host of opportunities.
Mm-hmm. Okay, a couple of other stocks and quick fundamental calls there. Gurmeet, one of the names that has come up for the conversation is CDSL. Do you like this duopolistic business structure, and therefore does it give you a chance to buy a good steady business at good valuations right now, CDSL?
Absolutely, Neeraj. And the kind of issues you see around you in terms of scams happening at whatever level, I think as you said, it's a duopoly play. They have reduced their annuity charges, so we're seeing a small. Obviously, there is NSDL and there is CDSL. Other than that, 1/3 of the business is more annuity. So those are, it's quite steady in terms of, it can be reasonably protected. Very, very asset light business. Just look at the ownership. You find the best of institutions, owning that particular company, and you can name them in terms of governance. Also, they're venturing into the insurance depository space, which to me could be a very, very big opportunity. You have 30 crore life policies of LIC. You add 5 crore of SDFC, another 3.5 crore of SBI Life, and the sector is growing. So that insurance depository could be another. It's quite small right now to begin with, but that could also be a significant catalyst in terms of revenues picking up over the long term. So very, very secular play. But it's not a multi-bagger play. It will be something which will be very consistent over a period of time.
I think that's the key difference for anybody looking to buy. And Gurmeet's point is well taken. It may not be a multi-bagger play, but a steady compounder over a period of time, and you need to probably have some patience. By the way, as we speak, the markets have turned adverse even more. So now we are 272 points down for the Bank Nifty, which has been okay, but the Nifty has seen just a sharp dip in the last few minutes. I don't think the Bank Nifty has seen as sharp a move, but the Nifty certainly has seen a bit of a sharp plunge. What is leading this? Yeah, Reliance at 1518, that is leading it 1.8% lower now. Bharti Airtel is sub 450. Sun Pharma 1.5% lower. So there is weakness across the board. Maruti Suzuki is corrected a bit as well. HDFC Bank, incidentally, at 1273 is correcting. So a lot of heavyweights. Reliance, HDFC Bank are a couple of names which are certainly correcting in the session. There are not enough gainers. That's the key thing. Save for Bajaj Finance, which is making a move, and a couple of metal names, we don't have too many stocks which are winning right now. That seems to be the problem for the index right now. Amar Singh, Bharti Airtel on the charts.
Yeah, looking at Bharti Airtel, what we see here is that the stock is in for some consolidation over the past few trading sessions, because on 16th of December it had made a low of 420, and from there it's currently around 448 odd levels. If we look at the charts on the daily charts, we see that there is bearish divergence on the charts, and also the stock has moved into overbought territory. So somewhere around 450, 460, that's a crucial resistance zone for Bharti. But however, the long-term trend, intermediate-term trend for the stock remains positive. So we'll have to watch out if the stock is able to hold the 420, 425 zone, because that's going to act as a crucial support zone.
Okay. Now, I also want to address Hero MotoCorp. Perhaps I can take that up with Rahul. Rahul, what we've seen in Hero MotoCorp is from month of November, where it was around 2,700 rupees per share, it came off. And sometime last week, there was a little bit of a rise coming through. And, well, it's currently at around 2438, 2439. Can this be taken as a change in that falling trend? Or if not, what would you like to see before you actually would prefer buying into Hero MotoCorp?
I think great question, but I'll expand my answer a little bit. If you look at the overall trend on Hero Motor, we dropped from levels of 200, in 2017, those highs of 4,100 odd, and we moved all the way down to about this 2,250, 2,300. So very good support here. So to answer your question from a long-term perspective, if you're someone who has a horizon of at least 6 to 8 months, then this is not a point you want to sell out. This is not a point where you want to short. It is a decent point to start accumulating. Can I ensure and time that this is the perfect bottom? Very hard to call it that way, but the indications are all there. The only thing I dislike in the up move that we've seen over the last 5 sessions is the declining trend in volume, and the fact that this up move is not a breakout. So if you're looking at as of now, this is really not a breakout, but again is an attempt to move up from a strong support level. If you have the courage to hold on, or the conviction and time frame to hold on, this is a stock I would start adding to the portfolio. Keep 2350 as a stop loss and accumulate the drops.
Okay, I would want Agam to weigh in on this as well, but since we are very close to expiry, both Amar and Rahul may come in on this, and Gurmeet, then we'll come back to you for a couple of other fundamental conversations. But Rahul Mohinder, as you see as we enter the last 18 minutes of trade, how is the rollover position looking like, and are there any inferences that you draw out of that? Because we are certainly on the price front at almost the lowest point of the day right now.
Certainly as I was mentioning, 12,150 is an important support level. Again, you've got to give some leeway being expiry day. My own sense is, let's not jump to a conclusion today. Try and watch the Nifty spot tomorrow. This may just be the right point to get in. As I was saying, the leading stocks like Reliance, or whether you look at the Nifty, these are all at good support levels. So again, this is not a moment of panic. We need to understand this is an expiry playing out. Good volumes even on a stock like Reliance at this support. So I'm thinking more in terms of, should I buy now with a 10 rupee or 15 rupee risk and move ahead?
Amar, what about you? How would you view this last half an hour of trade, and based on the rolls, is your opinion different from Rahul's?
No, I would say that, overall the trend remaining positive, but what we are witnessing on the hourly charts is that Nifty is approaching a very crucial support zone. So 12,050, 12,100 levels on the spot. So I would say, and even if you look at the hourly charts, they are very negative. So it effectively means is that any pullback again will be used as a shorting opportunity till the time we don't see Nifty sustaining about 12,200 odd levels. So I would say that from a very short-term perspective, we could see some selling pressure, but it should have strong support coming, as I mentioned, around 12,050, 12,100 levels.
Can we just pull up the Nifty futures and take a look at the premium too? Because I do want to dwell just a little more on that one and see how things are. Well, the Nifty premium, okay, this isn't showing us. The rollovers, of course, standing at a little below 60%. We have about no more than 17 minutes to go, and this rollover number, according to me, looks a lot less than the previous 3 or 4 month average. That said, I'm not certain how much can this picture change in the last 15-20 odd minutes, even though we are expecting a lot of traction there. The premium is just 3 odd points, so there you have it. So it's not looking very convincing at this point in time. And of course, we must remember the India Volatility Index is also, or rather it has been significantly low over the past 3 or 4 days. If we can also have the VIX up, and it's fallen even further. So it's around 11.2 now. So that's the other factor that you do keep in mind. At what point in time can this get arrested? Can this fall in the VIX get arrested? And when can we start expecting perhaps a little bit of an increase in option premiums? Amar, in your opinion, do you think that the expansion in option premiums would be sooner than the second week of January? Or do you think that, markets could very well be subdued until then?
I would say, looking at the India VIX, which you mentioned, what we see here is that it has a declining trend, and also if we go back and look at it historically, so it has made a low of 10.7. So that's where the support also lies, 10.5, 10.6. So I would say that the downside definitely seems to be limited. So there is a probability that we could see an increase in premium, I would say options premium from next week onwards.
Okay, all right. Well, I guess it's that time of the day when we get in our dealing room check. And we have Darshan Mehta, who is here with us to take us through what the channel checks are suggesting. Darshan?
Yeah, so Agam, one of the stocks that's been spoken about today is Interglobe Aviation. It's trading up almost 1.3%, a decent volume seen on the counter. Dealers indicate there's a buzz of potential corporate announcement that could come in. Some even pointing out some bit of announcement relating to the promoter issue that's going on. So that's something that we are watching out for. The other counter that we are watching out is India Bulls Housing Finance. It's down almost 3.5%, come off significantly from the day's high, but there's a buzz of potential fundraising plan that could happen. So that's something that we are watching out for. And SRF continues to surprise, continues to trade at record highs at 3,400. Dealers believe that the momentum will likely continue for this counter.
Well, big move there, and a touch of these specialty chemical names are doing well. Darshan, thanks so much for putting those into perspective. So that's what dealing rooms seem to be recommending in the session today. Mind you, it's not all bad. It's just that, some of these stocks which may have had a gain in this expiry too, on this series or this year, are all giving up. Reliance Bharti Airtel is down 2.5%. By the way, I must mark, if we can pull up the MRR function on the Nifty 50 for the year, YTD, you will see that 2 days ago, Bharti Airtel had eclipsed Bajaj Finance as the best performing stock for the year. Now, I think Bajaj Finance would be back in pole position as the best performing stock in the year, and the others, and followed then closely by a stock like maybe Bharti Airtel. So Bharti Airtel is number 2, Bajaj Finance is number 1, and ICICI Bank is number 3. That's the nature of the stocks that have moved. This may not be very legible, but this is what's happened now. Bajaj Finance, Bharti Airtel, ICICI Bank, in that order, are number 1, number 2, number 3, and Bharti Airtel is number 2 simply because it's fallen 2.5% today after having a slightly subdued outing in the session today. And Reliance, by the way, is at 1513. But keep in mind, I think Rahul Munder's point is well taken, that this may well be an area around which maybe you could go out and create some long positions, because the markets may actually bounce back, or specific stocks may actually do well. So let's try and do that before we get back to fundamental conversation. It's about 12 minutes left for the markets to shut shop. Let's take in the top closing strategies from our experts then. Amar Singh, to you first, your top call for the day today, or as we close, your top closing strategy.
I would say one can look at Bharti Infratel. This is one stock which on the daily charts continues to remain positive. Even on the long-term charts, the stock has definitely found a very strong base. So this is one stock one can look at buying. So ideally, the stop loss needs to be below 247 levels. whereas on the upside, the stock has the potential to rally towards 268, 270 levels.
Right, Rahul, so the same question to you, something that's looking interesting with respect to closing today.
So two stocks which grab my eye immediately. NTPC, that stock's making a charge in the last few minutes of trade. Obviously, clear breakout visible. I keep a stop loss at about 114 and buy in. I'm looking at targets of about 122 coming in on it. Another one which again comes up through my scans is Z Entertainment, again for a target of 306 could be bought in, keeping a stop loss at 294.
Okay, Rahul, we'll leave it at that. Thanks much for taking the time out and being with us today. I really appreciate your time. Mind you, interesting call on a Z Entertainment. Amar, stay on. We'll just take in some final thoughts from you as well. But Gurmeet, a question that we've gotten, and today, some of these insurance companies are moving up even more. HDFC Life is at close to 630. So while the others may not be doing as well on a falling day, HDFC Life continues to rise and shine. 638 or 639 and counting. A big spike there. Maybe a technical view is warranted too, but first, Gurmeet, to your fundamental view, does it give you the valuation comfort, or would you rather avoid HDFC Life at the current valuations?
No, Neeraj, as I said, the industry will expand 5x, 6x. There's no point looking at, the embedded value right now. Just to quote, it's right now 20,000 crore plus, which makes it, at about maybe 4 or 5 times. On embedded value. But, you've been interviewing the new CEO. I think, what we need to see is how much the market can expand. I mean, LIC is 30 crore policies. HDFC has just hit 5 crore. So I think the way upwards is quite high. And the tie-ups they are doing on digital front, I mean, we spoke about, Airtel and Paytm, between them doing 37 lakh policies, last year, which is a big number. And this is only going to, go up. The VNB margin, which is one of the key metric for profitability for insurance companies, is 57%. And the value to new business premium jumped up to almost 960 crores last quarter. Some of the product innovations they are doing, is phenomenal, especially on the retirement solutions front. I think this is one unaddressed need in India because, of the lack of social security net. And they're becoming very, very expense conscious. There is their solvency ratio has remained very, very stable at more than 190%. We have discussed persistency ratios. So my view is the market will expand. It will go up 6-7 times, and you buy it at any price. You just keep accumulating this over the next 5-10 years. And it's same with HDFC Bank. We last 10 years I've been tracking it. I've never seen it below 4 or 5 book value. I've never seen it below price equity ratio of 30-35. And it's just that it just keeps compounding and expanding the book. And I think it is that kind of a play.
What's typical of HDFC Life is if you consider on a daily basis, and you look at the top 10 gainers, HDFC Life will never be among the top 10 gainers. But if you move on and look at the next set of 10 gainers, HDFC Life will follow. My point is it grows, but it moves by around 1%, 2%, 1%, 2%. And that's where the consistency has been there. It's certainly been the case specifically over the last 2 or 3 odd weeks. Amar, can you come in on HDFC Life as well? Would you initiate fresh longs? Of course, it's not in the futures and options space, but even the cash markets, would you want to buy into something like an HDFC Life at this point?
Yeah, I would say looking at HDFC, what we are seeing is HDFC Life. What we are seeing is that the trend definitely continues to be extremely strong on the long-term charts as well as the short-term. We are seeing on the daily charts there is a build-up of momentum. What we've seen is that the stock had made a high of 646 on 31st of October, and it's made a high of 639, 640 today. So ideally, I would say, and there is a very high probability that it would breach those levels. So yes, dips can be used as buying opportunity once the stock sustains above 645, 650 levels. And the stock has got good support coming at around 610, 620 zone. And this is definitely a stock on any major correction, on any dip, it should be used as a buying opportunity because the trend remains extremely strong for the stock.
637 and counting, very close to life highs. 14 rupees away from there. What's at life highs? Stocks at life highs include Mass Financial, Whirlpool, which is up 5.5%, and Phoenix Mills, 4.5%, 817 and counting. I mean, Darshan spoke about SRF, that's the other one. But these three, and there is Adani Green, but that's just such a difficult business to look at. Gurmeet, before we thank you, between Mass Financial, Whirlpool and Phoenix Mills, three different sectors, but all stocks at life highs. So which one do you like the most, if you like any of them?
See, I think Max looks better considering the issues it has had.
Gurmeet, I'm talking about MAS, Mass Financial.
Sorry, I thought it's in Max. No, so I don't track. Phoenix is something we used to track. I think it's a very different portfolio in terms of the assets it has. So that's something we are positive on. It's not really a proper real estate portfolio. But, as I said, more commercial, more annuities, the kind of revenue streams they have, the debt reduction efforts they are making. So that is something we look at. Adani Green, as you rightly said, very difficult to really, comment on. As far in terms of the consumer electronic, I like Dixon more, than any, and we have discussed that in retail, how between consumer electronics, the lighting segment, home appliances, mobile segment, every segment just continues to do well. The cash conversion cycle we discussed last time has reduced almost from 7 days to almost 0 days. The net debt has come down to, I think it's less than 520 million, if I'm not wrong, and obviously it's aiding the free cash flow generation. So, and I think there is a scale in terms of, the migration to the ODM bit. So that's one play I like, which again is a very long-term secular play.
Well, big move in today's session too for Dixon Tech, 3939. It was 2,800 or thereabouts a year ago, and that's exceptional uptick out here. And thanks, Gurmeet, thanks so much for joining us today and giving us your thoughts and for pointing out Dixon as well. I remember this conversation with Dixon Tech when they did the back end for Xiaomi, and Xiaomi emerged as the most sold phone. This was in Diwali. I think Dixon Tech in the last 2 months would have gained quite substantially as well. This year is 98%, but the last 2 or 3 months has gained quite substantially, because I remember it was at 3,200 or 3,300 back then. It's now 3 months about 37%. Quite stunning, the kind of gains here. Okay, but Amar, one pocket before we start wrapping up the markets, one pocket is fertilizers. We don't normally talk about it. On a losing day maybe less so, but RCF, Chambal, etc., all of them have had some good gains on pretty decent volumes today. Any trades here?
Yeah, looking at the fertilizer stocks, Chambal is one can look at because it's formed a base and on the daily charts, and also there's good volumes today. So this is one stock one can definitely look at. Currently it's around 146, 147 odd levels, so one can initiate long positions, and on the upside the stock has a potential to rally towards 154, 155, and ideally the stop loss needs to be below 142 levels.
Amar, if it's possible, can you come in on ICICI Securities as well? It's a stock which is used to a lot of sharp intraday movements, and while it has seen a lot of momentum of late, today it is down about 4%, currently at 364 odd rupees per share. Any observations on ICICI Securities, Amar?
Looking at the stock on the monthly as well as the weekly charts, the stock continues to trade positive and the overall trend remaining positive. But what we are seeing on the daily charts is that today's low, as you rightly pointed out, today's high is going to be something which is going to be very crucial, because there is bearish divergence on the daily charts, and also one of the indicators clearly show that there could be some selling pressure in the stock. So ideally today's high is something that needs to be watched out for. As far as support levels are concerned, the stock has got good support coming around 345, 350 levels.
Okay, let's start Amar, stay on. We'll just take in final thoughts from you, but let's start wrapping up the markets. It's not turned out to be a great day. And in fact, we are closing in at the lowest point of the day. 32,000 holding out for the banks, Nifty, 12,100 for the Nifty 50, and 41,150 for the Sensex, but that's hardly any solace. Mid caps and the small caps too, I reckon, should have come off a little bit from the levels that they were trading at. So ending the day absolutely flat, but they've done better than the large caps. Let's talk, maybe the large cap performance might change tomorrow, who knows. Let me talk about the large caps, then Agam will speak about what's happening across the broader end of the spectrum. Well, ONGC 2.5%, commodity names like Vedanta doing well. Bajaj Finance has had a pretty rocking day, about 1% odd. But as I said, commodities are doing well. So JSW Steel, Tata Steel have done well. iShares has gained a little bit. There's some strength in Bajaj Finserv and Asian Paints as well today. What's not done well? Yes Bank down about 4.5%. Bharti and Reliance, both of them correct about 2% apiece. There is weakness at L&T. HDFC Bank is the other one, 1.76% lower. So between Reliance and HDFC Bank would be the top two losers, and then maybe a Maruti or a Kotak Bank, etc., would be chipping in as amongst the top contributors to the losses in the session today. So not a great day for heavyweights in the session today, Agam. What about the broader end of the spectrum?
Well, I was surprised to see some amount of upward momentum in a handful of these mid-cap stocks. And let's start by talking about Infibeam. That one is up around 17.5%, if I'm not mistaken. It's turning out to be a very good day of trade when it comes to Infibeam, and that should be up there. There you have it, about 17% higher. We have Dishman Pharma. This is more perhaps a case of a recovery coming through. Do remember, Dishman Pharma was one of those which have seen very, very sharp cuts of late. Today it's up around 10%. Is this a case of those shorts being covered? Well, we don't know, but Mass Financial is the other one, as we just mentioned a few minutes ago. It's up as much as 8%. It seems like it's going to close near day's high, if not at day's highs. And the other one which is doing very well in today's day of trade is Whirlpool India. Whirlpool, of course, has had a phenomenal 2019. But it's up as much as 4 or 5.5%. It did see a little bit of a correction after the quarterly results announced, a few weeks ago. But that said, it's currently back above and back into the gaining momentum. Besides Whirlpool, we also have Bharat Dynamics, which is doing very well in today's day of trade, also likely to close near day's highs. But with that, let's talk about a handful of stocks which are looking at declines there. And we do have a whole host of relatively smaller public sector banks. So we do have weaknesses, something like a Union Bank, which is down 7%, Syndicate Bank, which is also declining by around 10.5%, Allahabad Bank, which is also under pressure. But besides that, in the financial space, something like an Indiabulls Housing Finance, which is also looking at a knock of around 5%. So watch out for that one. We have Shilpa Medicare, which has always shown up in either the top gainers or the top losers list. Today, it is on the losing end, down 4.5%. And ICICI Securities under pressure and closing near day's low. So that's down around 3.7% for now. Not the most encouraging trends when it comes to the broader markets either, Neeraj.
Yeah, but let's see if this reverses tomorrow. I'm interested in seeing the volumes in the session today, the cash market volumes. F&O volumes would be higher. Yeah, F&O volumes not surprising, but cash market volumes, Agam, third day on a trot now. We are sub 30,000, clearly shows the FIs are absent.
Right. And of course, it was also evident in the numbers day before. I'm sure we may have such a number. But let's also take a look at the advance decline ratio and see how things are panned out in the broader markets there. So, it's not necessarily a very wide difference between advances and declines, almost evenly poised between them. And it does seem like it's not as bad a day when it comes to the advance decline ratio as expected.
Yeah, not at all. The advance is higher than the declines, and you would see the reason why. The next plate, which is the contributors, will show you how HDFC Bank, Reliance Industries, between them, just negated almost any kind of gains that would have come in. Look at that, 45 points between the two of them. The others almost irrelevant. Kotak and L&T, etc., doing their bit too in terms of putting pressure. And not countered too much. I mean, hardly any gainers today in terms of weightages, and that's the interesting bit. But Agam, the VIX would be the other interesting factor, wouldn't it be?
Yeah, I mean, I can't understand how the VIX is down 6% on a day when markets have fallen as well. But Neeraj, to a certain extent, you've already spoken about it because there are only two stocks from the indices which are providing nearly 50% of the declines. That's Reliance and the other one was HDFC
Bank.
So, but I'm going to have to go back and see when was the last time we saw the VIX at around 10.9, because the last I knew was that VIX was as low as these levels was somewhere around July 2019. Have we broken those lows?
I think not. I think there maybe we were around, if I'm not wrong, we were around 9.9 or 10.1 or thereabouts.
Right, sure.
So, but yeah, circa those levels. So we're still around this July, but at the lowest end, I would guess.
I mean, certainly, especially given the kind of period where we are expecting an increase in volatility, it'll be interesting to keep an eye on the India VIX. But Amar, I'll come back to you on your closing thoughts for today, the way forward from here on.
I would say that the closing has been weak, so we've not seen any pullback. So we'll have to watch, and today is also expiry day, so we'll have to see how Nifty plays out tomorrow. So ideally, as I mentioned, The hourly charts are displaying some sort of a negative strength. So on the downside, 12,050, 12,100 would be a level to watch out for technically. That's a crucial support zone. And on the upside, as I mentioned, 12,150, 12,200 levels. So this is a spot Nifty which I'm talking about. On the daily charts as well as the trend, if we talk about the trend still remains positive on the positive side. But these are levels that definitely needs to be watched out for tomorrow.
Okay. We'll wrap it up on that note. Amar, thanks much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. But with that, it's a wrap on this edition of Countdown. Thanks so much for watching from Agam and me and the team that put this show together. But stay tuned. The Market Wrap with Agam is coming up next.